Good afternoon, everybody, and welcome to session 13, Successful Mining and Investment Strategies in WorldMiner. With me here today, we have Cesar Antonio Martin, working the back office, and myself included. I am Ola Johannes Lind, I'm the CEO of WorldMiner. So let's dive into today's session. But first, obviously, you can join us at worldminer.io. You can download the app from any digital store, Google or Apple Store, and be part of our communities on Telegram, WorldMiner Global and WorldMiner Brazil. And obviously, you can also follow us in WorldMiner social media presence, Instagram, Facebook, X, YouTube, and Medium. Stay informed and know about the latest in crypto and mining world's news. So let's begin with WorldMiner and its main proposals. WorldMiner is an AI platform that is leading the way in combining blockchain technology with artificial intelligence tech to provide computational power for artificial intelligence large models to create the world's largest digital mining ecosystem, to maximize energy use during the mining, lower carbon footprints, and advance the sustainability development that is for us very important. WorldMiner makes use of staking mining mechanisms while offers a staking mining mode that do not require purchasing expensive equipment nor applying complex mathematical knowledge, make it a more democratic, low threshold, but high yield option. So let's start from the beginning. How investing in cryptocurrency? What is there and how to do, and what not to do? There are many crypto supporters who believe that digital currency is the future. Many individuals who endorse Bitcoin believe that it facilitates a much faster low-fee payment system for transactions across the globe. Although it's not backed by any government or central bank, crypto assets can be exchanged for traditional currencies. In fact, its exchange rate against the dollar attracts potential investors and traders interested in currency plays. Indeed, one of the primary reasons for the growth of digital currencies like Bitcoin is that they can act as an alternative to national fiat money and traditional commodities like gold. And Bitcoin has a lot of similarities with gold. It's scarce, it costs a lot to mine, and it has a value that is globally utilized and could be traded, meaning that you can liquidate it anytime, anywhere. So in March 2014, the IRS in the US stated that all virtual currencies, including most popular cryptos, would be taxed as a property rather than a currency. Gains or losses from crypto held as capital will be realized as capital gains or losses, while cryptocurrencies held as inventory will incur ordinary gains or losses. Like any other assets, the principle of buying low and selling high applies to cryptocurrencies. The most popular way of amassing the currency is through buying on a crypto exchange. But there are many other ways to earn and own different crypto. And as with any kind of investment, risks is always associated with cryptocurrency investing. is something we cannot get away from. Although the first cryptocurrencies was not designed as a normal equity investment. No shares has been issued. Some speculative investors were drawn to the digital currency after it appreciated rapidly in 2011 and again in late 2013. Though many people purchase cryptocurrency for its investment value rather than the ability to act as a medium of exchange. However, the lack of guaranteed value and its digital nature means that actually a purchase and use of Bitcoin carries several inherent risks. I would say many investor alerts has been issued by the Securities and Exchange Commission, SEC in the US, and the Financial Industry Regulatory Authority, FINRA, as well as the Consumer Financial Protection Bureau, SFPB. Did I get it right? Yes, Consumer Financial Protection Bureau, and other agencies. The concept of virtual currency is still novel. And compared to traditional investment, cryptocurrency doesn't have much of a long-term track record or history of credibility to back it. But it has thousands of success cases related to profitable trading and, of course, mining as well. With that increased popularity, cryptocurrencies are becoming less experimental and a more solid assets every day. Still, after only a little more than a decade, many digital currencies still remain in a development phase. Some still consider them as a high risk, highest return investment that you can possibly make. But is crypto investing that scary? We are certain it isn't, but let's analyze the situation with objectivity. Okay? Some barriers and risks. First of all, the regulatory risk. To invest money into crypto in any of its many guises, if not for the risk averse, go to the market leader, Bitcoin, are a rival to government currency and can be used for black market transaction, money laundering, illegal activities, or tax evasion. This is what everybody in the beginning were doing, and many countries banned it because not really understanding. With blockchain technology, you have a much more transparency when it comes to actually follow a transaction through its chain that you cannot do with a normal bill, like a tender note, your normal currencies. I would say they are the ones that are much bigger risk of money laundering and illegal activities or tax evasion. Because with cryptocurrencies, you have the blockchain on the ledge that you can actually follow any transaction that takes place. And that's what you see today when they're hacking exchanges or others or do ransomware. They can actually trace it back to different bridge exchanges and so on, and freeze these assets as well today. For example, 2015, the New York State Department of Financial Services, they finalized the regulation that would require companies dealing with buying, selling, transfer, storage of any crypto to record the identity of the customers, have a compliance officer, and maintain capital reserves. The transaction worth 10,000 or more will have to be recorded as reported. As of same you have today when it comes to sending any transaction with US dollar in the SWIFT or in banks. Banks around the world are in compliance, need to report and flag any transaction over $10,000. But even today, In 2024, the lack of unified regulations about crypto or any virtual currency is still in play, meaning that the question of the longevity, liquidity, and universality. So, as you have seen, some part of the world has embraced it, and one of them will be UAE here in this region, Bahrain and others, where they have actually put in place regulation, made it clear and transparent to all stakeholders to participate in this growing economy of cryptocurrencies and virtual assets. Others has restricted and other has added taxation, like Scandinavian countries, where any things of the gains from crypto trading, you pay directly a 30% tax to the government. We are seeing the new MiCA regulation taking place in the European Union to be able to track and trace any transaction from one crypto exchange with the end user, the consumer, to have a more secure way of consumer protection in their view, but more so regulation and overview of the governments to follow and track transaction digitally. So some essential steps of investing in digital mining, for example. So investing in this space can be complex, thrilling, and potentially rewarding in that. But there are some key strategies to consider. First of all, research and due diligence. Before investing, it doesn't matter what it is. Do your research on mining pools or companies, transparency, reviews, and fee structures, etc. Diversify. Don't put everything into one egg. Consider alternative investment options before traditional mining, like you would do with your normal salary. Certain percentage will go to savings, some for future entertainment, etc., etc. Same should go with investing. So you can invest in different things. Can be a crypto exchange, blockchain technology companies, or digital asset projects. Data-driven decision making. Digital miners can benefit from integrating real-world data center power with digital mining operations. This allows for more efficient resource allocation and potentially higher returns. This case with WorldMiner is one of the front-running in this space with OpenAI's platform to do such things, because looking into the future in the near term and the long term, artificial intelligence has been embraced by everybody today. It's not a fad, it's part of a strategy when it comes to governments to make a government more streamlined, meaning that they can have better data to do better for their people, for their communities, to better handle situations when it comes to anything within the government space, from permits to driver's license to whatever it is, to streamline different kind of databases together to make it more efficient for the end consumer. Same goes for public companies. They want to make sure that they can streamline their operation, offer the right products and services to the end consumer, and that they can do it in a way that is more personalized. Same with the end consumer, like you, like me, when we start utilizing tools either for our work or for our fun, meaning that maybe you have photographs or other things that you want to AI generate to make something more cool out of, send to your friends and families, or in invitations for weddings, whatever, utilizing AI technology. utilizing it for your daily, if you're looking for a job, to do your resume, to streamline your resume, your text, your scripts, whatever it is, as a small business or a normal private company, utilizing it in your HR initiative, meaning that the AI will help you in selecting the right candidate for the right purposes when it comes to what you're seeking. Streamline this process much faster and more accurate when it comes to data processing, when it comes to anything, customer service, product thinking, new product or new services to develop, etc., etc. AI will have such a big stake in this in the future, meaning that as WorldMiner and the computing power and the digital mining operation, how we will integrate this to be one of the front runner on OpenAI's platform. That are the front runner today in artificial intelligence globally, means that we have a bright future in front of us. Meaning that, for an example, having this integrated real-world data center power with digital mining operations will allow us for a more efficient resource allocation and potentially high returns for all our miners. You can stay updated about the crypto and token markets by reading them on the WorldMiner app, or as well in WorldMiner's profiles on social media, etc. So important to stay informed about the latest advancements in mining technology and consider investing in companies or projects that are the fourth runner of innovation. But also to understand the crypto's uniqueness, because many cryptos are unique monetary goods or transaction related. And as an investor, you should understand the basic principle or characteristics of this before you're investing in mining. And remember, investing in digital mining, as any other investment, carries inherent risks. So it is crucial to do your research, understand the market dynamics or the tokenomics or the dual economic part of your investment wisely. Because not as crypto trading, where you trade one specific coin and take the risk for the high or the lows, depending on what kind of trade you're doing. Crypto mining is for the long term. You're looking for 7 days, a month, that I see very short term, but 3 months, 6 months, a year. So the dips and the highs and the volatile market doesn't affect you because you are looking at the long-term strategy in your digital mining. And the process of digital mining, which transactions are officially entered into the blockchain, is also a way that new digital coins are launched into circulation. It's a complex process and it requires specialized hardware and software. So in the market, there is many different ways to invest in digital mining. But it's important to understand what kind of mining and what risks you are exposed to. Are you looking for high risk returns, or are you looking for less aggressive and a long-term project? So there's so many considerations that you have to do as an investor. But another way is obviously to invest in digital mining is to buy shares in the company that mines cryptocurrency. You can see this in the big players for Bitcoin, for example, as seeing since the Bitcoin half, the cost of operation has gone up. So you now see some other bigger players trying to actually, almost in a hostile takeover, take and buy their competition to make and streamline bigger operations to get better hash, meaning to get better returns on their own operation. Or investing in a cryptocurrency mining pool. That is a group of miners who share the resources to increase the chances of finding a block. It's important to remember that digital mining is a volatile market because the price of cryptocurrency fluctuates significantly, and there is always the risk of losing money of the rewards. So it's important when you mine, if you mine coins, that you are taking that in consideration, or if you have a principle like USDT, where you don't have the risk of losing or ups or down, but you would have that on the reward part of the mining, the dual coins that are then processed. So do your research and understand the risks involved. So we saw this a lot in 2020, for an example, 2019, when Bitcoin had its first big uptake. And this happened a lot, and let's discuss it. Taking loans to go to crypto and mining market, is it right? So taking out a loan to invest in crypto trading or mining is a risky proposition. Me personally would say no to, because it should be approached with extreme caution. It could be extremely potentially lead to a significant profit, but it carries a very high risk of substantial losses. I will explain the pros and cons. But for an example, 2 weeks back when we saw the very big dip in the global market, not only on the stock markets, but it's actually started with the carry trades in Japan, where actually a lot of financial institutions and players could borrow cheap money in Japan and invest in it. But then suddenly, out of the blue, the central bank in Japan decided to raise interest rates. So suddenly it didn't become so cheap anymore. And due to that, there was a sell-off in the marketplace. When a sell-off happens, many times, like in futures and other things, both in the crypto got caught up in this as well. Due to a lot of sell-off, meaning that the stock went down globally, same as cryptocurrency went down. And when it goes under a specific threshold, if you have borrowed against your investment, the bank or the crypto exchanges will then call in these specific loans or parts, meaning that it goes even deeper, meaning that you're going to lose on your investments. But it doesn't happen all the time. Me personally, I would not do it, but there is potential for high returns because cryptocurrencies have historically experienced periods of rapid growth and offered a potential for substantial returns on the investments. But leverage loans can amplify your investment to earn more profit. But the instability, not only to cryptocurrency, is an unstable asset, but its market is highly volatile as well, meaning that prices can fluctuate dramatically in a short period, up or down. And this volatility increases the risk of losing your investment, including the borrowed funds. And we saw this specifically back before COVID, when 2020, in Southeast Asia, for example. I know a lot of cases in Malaysia, Singapore, etc., because the Bitcoin went from a few $1,000s up to $20,000 and above. And everybody was talking about it. And a friend you heard of or he had made an incredible gain. And so a lot of people say, hey, if it goes this way, why don't I borrow money? Because borrow money is very cheap at the moment, 1%, 2%, or 3%. and I'm getting a return of 70, 100, 150, 200% within a month, why not? So many people did this, but then you had the crash back then, the dip, and a lot of people lost everything. So if you cannot afford it, do not do it. This is very important. My personal view, everybody has their own view and way of investing. My personally is against it. Do not borrow money to try to make money in a market if you don't specifically are an expert and know it very well and are very disciplined and can put in different tools of when to buy, when to sell, like bots and so on. And then obviously regulations. Since the crypto market is largely unregulated in some places, it can increase the risks of very fast changes if the government goes and decide to do something and put in regulations that affects your investments. So it's crucial before taking out a loan to invest in crypto. It's crucial to do the research on the market, assess your risk tolerance, compare the options. First of all, develop a sound investment strategy. If you don't have that clear plan, do not do it. And ultimately, the decision of whether or not to take out a loan to invest in crypto is a personal one. Me personally, I'm against it. So it's very important to weigh the potential rewards against the risks involved and make that informed decision on your individual circumstances. Okay? All right. Let's move forward. So let's talk about WorldMiner and its platform. WorldMiner has greatly lowered the threshold for participating in mining by introducing a pledge-based POS mining model for the early miners to join. Users only need to pledge a certain number of tokens to obtain the corresponding allocation of computing power, participating in mining, and obtaining stable income. Compare this with traditional equipment mining. This method reduces the equipment and maintenance cost, allowing more people to easily participate in the development and in the rewards. Remember that from the earlier sessions, there is two different kinds of mining. It's POS and POW. POS, proof of stake. POW, proof of works. So let's start with proof of stake. In this, there is nodes, and these are known as validators. They validate the transaction to earn transaction fees. Talking computers here now. Validators will validate blocks by placing a bet on it if they discover a block which they can be added to the chain. Based on the actual blocks added in the blockchain, all the validators get rewarded proportional to their bets, and their stake increases accordingly as of their work. Proof of work. The idea behind this algorithm is to solve a very complex mathematical puzzle and easily give out a solution. This mathematical puzzle requires a lot of computational power, and though the node who solves the puzzle as soon as possible gets to mine the next block. So there is a profitable option in ATM mining in WorldMiner, because mining the WorldMiner ATM token is a recommended method not only by our team, but also by many top miners. And we see this, for an example, that we are looking at the old proof of works ETH miners globally that today sits on a lot of machines that they cannot utilize due to the change on the ETH from POW to POS. So already many of them are experiencing daily outputs again with this modality. Because right now, you just need to open the app or online on the platform and go to Earn Space, where you select the ATM mining mode. And by clicking in more inside its square, you'll learn about this mode's unique features based in the technology that harness the powerful computing capabilities of GPUs. And the world mining computing power mining machine can efficiently handle these complex AI algorithms and model training tasks. So you participate in artificial intelligence mining by staking the world miner coins, WM coins, to earn the ATM coins rewards. You're benefiting from a flexible profit configurations and repurchase mechanisms. The ATM mining mode has a daily reward interest of 1%. And this is for a period of 10 days. So this is an interesting mining modality for anyone and their teams. So join in. And if you're already a member of the World Miners community and you're mining, congratulations. We are happy to have you on board, and we hope and we'll see more and more of your friends and associates and new miners joining us on the platform of worldminer.io. You can download the World Miner app, and if you have any questions or want to learn more, join our communities on Telegram, World Miner Global. And if you are from the Latin part of the world, and you can join, for example, our big group in Brazil, World Miner Brazil. And I will see you in the next session. I will now give the floor.
Thank you so much, Ola. We didn't have questions today, but we have many greetings and congratulations from our spectators, and we need to thank them for their presence and support. And of course, thanking everyone for being here once again, inviting you to listen to our session in Portuguese at 9 p.m. Dubai time. And thank you so much for being part of this community. Thank you, Ola.
Thank you so much, everybody, and I see you in the next session. Thank you.